Hey guys, welcome back to the 11th episode of the Friday Ticker. In this episode, I'm going to go over some recent trades I've made in the markets where I sold some options contracts, and I'll go over the potential profits for these trades. So let's get into it. Now, before I get started, I do want to disclose I am not a financial professional. I can't tell you what to do, when to do it, how to do it. I strongly suggest you seek guidance from a financial professional before you get started in the markets or selling options for that matter. And I also recommend go long in the markets for 10, 20, 30 years to build wealth. Okay. Now, in my portfolio, in my IRA, this is all pre-tax. I'm taking around 30% of my portfolio. It's sitting in cash in the form of around $350,000. And the other 70%, I'm still long in that portfolio for the next 10, 20 years. Okay, I'm still invested in stocks. But I'm taking this 30% and I'm selling options contracts, okay, in the markets. I feel it's a good way to collect income on that cash as well as collect a 4% yield on government money markets, okay, government bonds essentially. So now let's take a look at my first stock in UPS. This is a stock that has been going down and down and down over the last 1 to 2 years. And it's down to a point where it's got a 7.8% yield around there. And so I figured, hey, if I get assigned these shares by selling put options, at least I'm going to collect a 7.8% yield by holding the stock, which is pretty good. So I kind of feel like this is somewhat of a safe bet. Now, don't get me wrong. This stock can continue to sell off and I could lose money on this trade. But it's a risk you take. You know, to make money, you got to take some risks. So I'll get started. Now on September 2nd, and I'll show you right where I kind of bought in. It's right around this candle there. As you can see, that candle is a pretty heavy red candle. And if you're going to sell put options, you want to sell into weakness for put options because it's a bullish bet. You want to buy on red days and sell on green days. Well, it's the opposite when selling options contracts, okay? For put options, you want to sell them when you're in some deep red days, okay? Because you're kind of anticipating the stock flipping to the upside, okay? It's a bullish bet. Now, I had sold these right around $85 a share on UPS. And I had sold the 87 strikes, okay? And I had sold 5 contracts, which is equivalent to 500 shares. So I had to pony up around $47,000 to take this trade on, okay? And I had collected a total of 1566.63, okay, in premium on this trade, which I thought was pretty decent. It was in the money at the time, so I did have some time value as well as intrinsic value for this trade, okay? Now, so that put my average right around 84 and like 40 cents, something like that. It's not exactly the perfect math on that. And so I've been trading around, you know, it kind of been going down from here. So I figured I was going to get assigned these shares in the hopes that I could then flip and sell covered calls, okay? And you want to sell covered calls into strength, okay? And so around September 22nd, right around the end of where this arrow is, I had gotten assigned shares right around here, I believe, okay? And so, which was fine. I had to pony up the money. I got 500 shares of UPS, which I'm still holding to this day. And then I was waiting for a rally, okay, a relief rally in UPS. And I had gotten one right after I got assignment, which I got pretty lucky on. And it was right around here. Okay, I had gotten a relief rally. And right on this day, the stock had traded just above $87. So I sold covered calls at 87 strikes. And I had sold all 5 contracts, my whole position, for a total of $1,171 and 66 cents. Okay. And these were like maybe 3 weeks out. Okay. It wasn't a very long time period, which is why the premium wasn't a large amount, but it was pretty decent. So, and again, my average is 84.40. So I'm selling covered calls at 87. I'm going to collect that full premium that I sold those puts on of 15.66 if I close my position at $87. But fortunately enough, good old Donald Trump decided to tweet like 2 days after I had sold these covered calls, and look what happened. The stock dumped all the way down. Oops, that arrow. The stock dumped all the way down to here. And this covered call here that I collected $1,100 in premium had dumped all the way down to $363.34. So this was such an easy trade to close my position on. So now I collected the difference between $1,100 and $363. So that was like around an $800 profit in like 3 days. So I closed the position. So now I was out of that trade. And then, we got a little bit more relief after Donald Trump had kind of said, no, we're not going to tariff China 100%. So then like right away, we got a decent, relief rally here. And I had sold again the 87 calls. It wasn't right at 87, but it was right around like 85, somewhere around there. And I had sold those for around the same amount, $1,166.66. Okay, so I kind of just done the same trade, and this trade expires next Friday. And then today, the stock had a continued rally, which I was kind of surprised. And it closed at around $88 today, which today I could get assigned these covered calls and lose my 500 shares at $87. And then I could close the trade entirely for a total of $3,541.61 by selling put options, covered calls, and covered calls again. Okay, that would be my total profit if I get assigned this contract and have to sell these 500 shares. So I think that's a pretty good trade for around I'd say a 2-month period. That's what this trade is going to take in total. It started on September 2nd and went all the way to October 31st. I'm going to close this trade out on Halloween Day. Now, I could end up keeping this premium completely and still have the shares. And if that happens, let's say maybe the stock closes next week around 87 or 86, I'm going to hold the shares and I'm going to sell the same covered call at 87 a share next week. And maybe I'll go a little farther out. Maybe I'll try to hold it through the dividend and maybe earnings and collect maybe even another $3,000. We'll see. It all depends on the options market and what the implied volatility is. So that's my UPS trade, which I thought has gone really well. Again, you never know with stocks. They can go completely the opposite direction, not in your favor, and I could have been even losing more money. But you got to be aware of that. And then the next trade, and I'll keep that 3,500 there so we can do a total on this. My next trade was on AMD. Now, AMD had this crazy news with OpenAI where they're going to sell like 6 gigawatts worth of chips, which is pretty insane. And when this news happened, we had this massive gap up all the way up to like $230 this thing opened at. Now, I already owned AMD in my portfolio, but I said, man, this is an easy trade. And what made it even easier was on this first day, you see this super bearish candle. And this typically happens because it's such a big move that people start to sell off. You get funds that can't hold that much concentration of AMD if they've made so much money. So they'll sell off into the open. And I knew I was going to wait. I waited like 3/4 of the day. And I sold cash secured puts at strike prices of $200, and I sold, what was it, 5 contracts, which is 500 shares, okay? And that's around $100,000 in total value that I have to pony up in cash to satisfy this contract if the stock closes below 200 a share, okay? So I got to be ready for that. And I sold these right around $208 a share when the stock was trading around 208. Now the lowest it got was around 205, and I think at one point the contracts had went against me maybe like $1,400, and the total premium I had sold this for was 3101.66, okay? Which, you know, is a nice heavy premium, and it's only a 3-week contract. These contracts expire in 2 days this Friday. Well, I'm releasing this video on Friday, so it'll be expiring on the day this video gets released. So, and then the next day, you know, this thing, you know, gapped up. Well, let's see, erase that. Let's see. The next day, as you can see, this thing just went up and then up and then up and just kept going up. You see lower, you see higher lows, higher highs. That's an extremely bullish flag right there. And now today, these contracts are worth $50. Now, I could close the position, but for 2 days left, I don't think the stock is going to drop all the way down to 194, which is my break even in 2 days. I don't think that's going to happen unless we had some catastrophe happen, which could happen. Then I'd be out 3101.66. So, but I'm going to hold this for the next 2 days and collect my last $50 on this contract. It is probably going to expire worthless. So in total, my total profit, if these trades close as I expect them to, my total profit will be $6,643.27 for a 2-month trade. I feel that that is pretty good. If I could make $3,000 a month in premium, that's my mortgage payment basically each month. So I think that's pretty decent. I'm really happy with that. Now I'm also involved in this other trade in Target. I'm not going to go over that, but so that's a third trade that I'm in, and I am collecting premium as we speak. So overall, that's not too bad. Again, I'm not trying to be too aggressive. These are big positions. I do have more cash still sitting on the sidelines, but I want to take my time. I don't need to deploy all my cash at once. That cash that still is sitting on the sidelines, it's collecting 4% interest, including this AMD trade. It's still collecting 4% interest. The 100 grand that I ponied up for these put options, they're still collecting 4% interest over this 3-week period because I didn't have to buy the shares yet, okay? And I won't have to, I don't believe. I mean, if AMD were to drop $40, I'd be glad to buy the shares because I still think that stock is probably going quite a ways higher. So now if I would have bought those shares, those AMD shares straight up around $210 a share, I'd be up almost like, what, $15,000, $20,000 for where the stock is trading at now. So it's like, you know, a catch-22. Selling options is more of a conservative approach to trading because you're collecting premium up front and you're going way out of the money in certain circumstances, like with AMD. So, you know, in some ways you would think options are more risky, but in other ways they're not as risky. Okay, this was a pretty conservative bet that paid off pretty big, a nice 3-week easy payout. So I was pretty happy with it. So anyways, if you guys do have questions on options contracts that you want me to do any further videos on, let me know in the comments below. And if you guys could, like and subscribe to the channel, take a look at my previous video, and everyone have a great day. Safe investing out there. Later.